Welcome to the Daily AI News Digest for Friday, June 12th, 2026. This broadcast is sponsored by bestai.org. Today, we're cutting through the noise to look at cold market realities. We are seeing financial history made on the Nasdaq alongside a fundamental repricing of artificial intelligence compute across the sector. Let's get right into the headlines. SpaceX makes its debut on the Nasdaq today, carrying an estimated $1.75 trillion post-money valuation. This marks the largest initial public offering in financial history, and it sets a critical new benchmark for the broader technology sector. Meanwhile, the IPO floodgates for pure-play AI are officially opening. Both OpenAI and Anthropic have confidentially filed their S-1 registration statements with the SEC. They are laying the groundwork for multi-billion-dollar public listings expected later this year. And in product news, Anthropic has released Claude Fable 5. This moves their formerly restricted Mythos-class AI model out to the public market. It brings advanced capabilities, but also signals a strict shift in billing mechanics for enterprise users. Let's move into our analysis of the day's biggest moves, starting with the macro events shaping corporate finance. The structural mechanics of the SpaceX IPO require very close attention. At a fixed price of $135 per share, SpaceX is raising $75 billion. That figure more than doubles the previous record, which was held by Saudi Aramco's 2019 listing. But what the market is actually navigating here is highly engineered scarcity. SpaceX set its initial float, meaning the percentage of shares actually available for public trading, at just 4%. Furthermore, an unusual 30% of that float has been allocated directly to retail investors. This combination of an exceptionally low float and high retail participation sets the stage for highly volatile day-one price discovery. Behind that $1.75 trillion valuation, there are significant financial realities weighing on SpaceX's balance sheet, specifically tied to its AI division. Following the all-stock absorption of xAI in February of 2026, SpaceX took on massive capital burn. To put the numbers in perspective, xAI incurred a $6.36 billion operating loss in 2025. In the first quarter of 2026 alone, the division lost $2.4 billion, driven heavily by $7.7 billion in Q1 capital expenditures. Essentially, this IPO asks the market to absorb an entity burning through roughly $10 billion in cash annually, just to maintain its AI infrastructure. That intense financial pressure extends to the broader AI sector as well. If we look at the confidential S-1 filings for Anthropic and OpenAI, they present fundamentally different financial profiles, despite asking for similar trillion-dollar valuations. Anthropic, currently valued at $965 billion, is reporting an annualized recurring revenue of roughly $44 to $47 billion and is actually approaching its first operating profit. OpenAI, on the other hand, is valued at $852 billion, with $20 billion in ARR, but internal projections point to a stark $14 billion loss for 2026. Institutional investors are now actively weighing Anthropic's near profitability against OpenAI's heavy loss projections. The market consequence of this IPO avalanche is already highly visible. The Magnificent Seven technology stocks have collectively shed $2 trillion in market capitalization this June. What we are seeing is a direct result of institutional capital rotating out of existing tech positions, freeing up liquidity to absorb these incoming pure-play AI equities. Shifting our focus now to product and model realities. We'll look at the factual breakdowns of today's model updates and the changing economics of enterprise compute. Anthropic has formally rolled out Claude Fable 5, a model that was previously restricted strictly to cybersecurity and biology research partners. Fable 5 commands a strict 2x premium over Opus 4.8. It's priced at $10 per 1 million input tokens and $50 per 1 million output tokens. This premium pays for a massive 1 million token context window and the underlying capability to handle highly complex, asynchronous agentic workloads. To offset that premium, Anthropic has retained its prompt caching architecture. For repetitive, context-heavy pipelines, users receive a 90% discount on cached input tokens. This effectively drops the input cost down to just $1 per million tokens, which heavily incentivizes efficient pipeline engineering over raw, repetitive queries. Alongside this release, Anthropic is executing a rigorous billing overhaul effective June 15th. The core change here is the unbundling of the Agent SDK and headless programmatic API usage, essentially machine-to-machine, automated background tasks, from their flat-rate subscription pools. These automated workflows will now require a separate, non-rolling monthly dollar credit. Interactive terminal UI usage remains exempt, staying within the flat rate limits. Additionally, legacy models Sonnet 4 and Opus 4 face a hard deprecation on that same June 15th date. Next, we turn to regulation and business signals, examining the strategic agreements materializing across the enterprise tech sector today. IBM and ServiceNow have announced a major expansion of their current collaboration. This is aimed squarely at the legacy systems that block AI scaling. The partnership rests on three core pillars. First, application modernization, using tools like the IBM Bob coding agent for Java runtimes. Second, enterprise data governance, which extends the ServiceNow data fabric with IBM watsonx.data. And third, autonomous IT operations, integrating Red Hat Ansible to automatically detect and remediate infrastructure issues. The strategic rationale here is very clear. As John Asian of ServiceNow accurately notes, ambition outpaces foundation in most enterprises. So rather than forcing costly, multi-year rip-and-replace migrations, this partnership integrates AI tooling directly into existing legacy systems. It allows autonomous agents to safely and predictably operate on current mainframe databases and aging code bases. Meanwhile, OpenAI has signaled a strategic shift in how it accesses enterprise budgets. The company has structured an agreement allowing its models to be billed directly through existing Oracle Cloud commitments. By integrating into Oracle Universal Credits, OpenAI is effectively removing procurement friction. They're enabling large enterprises to purchase frontier AI capabilities using IT budgets that have already been allocated and approved. Let's move to the analyst's take, connecting these isolated data points into a sober, realistic view for institutional buyers and IT leaders. The central theme of today's market is the normalization of programmatic AI economics. When you look closely at Anthropic's billing shift, the message to the enterprise is unambiguous. The era of subsidizing heavy, autonomous AI coding loops on $20 consumer subscriptions is over. Compute has a hard cost. As AI shifts from simple human interactive chats to thousands of automated agentic loops, vendors are forcing those workloads into strict, consumption-based billing models. For operational foresight, it is essential to map the timeline of critical deadlines over the next 30 days. Today, June 12th, SpaceX trading begins. By June 15th, the Anthropic credit shift goes live, meaning any automated pipelines on deprecated models will fail. June 18th marks Google's mandatory CLI migration. On June 22nd, the promotional free access to Fable 5 on Claude subscription plans comes to an end. And finally, around July 7th, SpaceX is expected to enter the Nasdaq 100, an event that will force mandatory passive index buying. We'll wrap up today's explainer with a final look at the broader macro environment. The tension is highly evident across the market today. Massive capital expenditures are required to build these frontier models, yet those same companies are now demanding unprecedented public valuations. The upcoming roadshows for OpenAI and Anthropic will rigorously test the absolute limits of public market liquidity. That concludes today's analysis of the AI sector. For ongoing, fact-focused coverage of market realities and enterprise AI deployments, please visit our sponsor at bestai.org. We leave you with this critical question. As the IPO floodgates open, how exactly will global markets absorb over $1 trillion in new AI equity? Thank you for watching.